late night, they ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, remaining so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was all just a test.
Hey guys, welcome back. So today we're going to jump into the charts. I want to do an update of the current positions that I've taken alongside you guys. So anything that I've mentioned in my Telegram group, as well as trades that I've taken and mentioned on videos, we're going to do an update to all of those positions. We're going to start over here on our trade tracker document. So I do have this just to keep things transparent, to let you know and keep track of what we're entering, when we're selling, what our targets are, and our current profit and loss. So we've done pretty successful. I'm actually pretty happy with our current performance. You know, we did sell a ton of our positions up near between $97,000 and $100,000 per Bitcoin. We de-risked a lot of different altcoins and meme coins, anything highly leveraged, so any kind of leverage positions, longs, shorts, that kind of thing. Everything we de-risked and then avoided that major market downturn. And then ultimately we were able to use better use our capital on that dip there. So we saw markets dumping. We saw Bitcoin down 30%. We saw traditional stock market indexes down about 22%. So we avoided the downside. We realized profits on the upside, and we've been successfully trading and accumulating assets during this dip here. So we do see we did buy some spot altcoins. We got a little too aggressive here. So we all make mistakes. I did make a mistake here. I had hoped that we were going to try and piggyback some hype off of the crypto summit and all of that. There was such an anticipation for bullish crypto regulation. We kind of just saw since then a lot of stuff bleeding pretty bad. So we see some of these are down quite a bit. That's okay. I don't mind holding them. They're very small positions. That's what I talk about, managing our risk. So in terms of sizing, when you go to buy assets, the riskier the asset is, generally speaking, kind of the smaller you weight that asset in regards to your overall portfolio. So for me, I'm weighting these stock trades a lot higher in terms of amount of capital than I am something in like these altcoins, because these are very small market cap, very small coins. They're speculative. We're just trying to utilize these assets to try and outpace the growth in Bitcoin, increase our Satoshi or our dollar value of our portfolios. But a lot more conservative with our stock market buys here. What we were actually able to do is we took our profits off the table when things were high and overheated. We saw the kind of market dumped. We let that play out. We were successfully trading that chop. So I'll show you over here on our swing trade tracker. So swing scalp trades, these are short-term trades. Look at that. We've successfully managed to net about 50% returns on our swing trade portfolio. So really good returns here, really good buys on that dip here. We took our profits from swing trading, rotated it back into these stocks. So essentially what you got was risk-free positions. We used profits from other trades to buy new positions. I consider those house money positions because we took our profits and simply reinvested them. So to me, all these positions right now are technically risk-free. These are all the entries that we have marked. So SPY came down. It went just below our target. I think it went to about 481, 482. So look at that, bouncing to 566. We're looking at about 17% profit on those SPY buys. The QQQ here, so the NASDAQ, we're looking at 15%. NVIDIA, we're up 13% from our average DCA cost. CoreWeave here, I talked about this, under $40. Look at that, it's up to 50 now, pumping very well. Look at that, almost 30% returns on CoreWeave, almost 30% returns on Palantir, same thing here, 25% on Baba. MP is just shy of our break-even price, so it did come down a bit. I should have probably dollar cost averaged a little more into it. That being said, I kind of got distracted, so no harm, no foul. We're just about break-even. The MSTY here, this is a yield farming strategy, so we see that we're up 16% here in the stock price, and we're going to get a dividend this month, so it's hard to really say what the payout's going to be, but we might be looking at, potentially $1.50 per share in terms of a dividend. So we've got 16% price appreciation, and if we get a 10% plus dividend, that's really, a really good opportunity. We've essentially made 25% of the position back already, and it's only been a couple weeks. MicroStrategy here, we had an average cost of $290. It's currently sitting just below 400, looking at almost 37% returns there. So when we take all of these, put them together, we've got an average gain or loss of plus 20% per position. We're at about 90% positions in profit. We look at our swing trades. We've got 50% realized gains here. So this is the difference. These are unrealized gains. When I talk about unrealized, that just means I haven't taken profits on these. These are just positions that are running. Over here on the swing trade, these are realized returns here. So on a swing trade, we have closed these trades and we have net 50% returns on that portfolio with a win rate of 82%. And then looking at our altcoins, like I said, we got caught a little offside with our altcoins. That being said, a mixed approach really can kind of average out that return. So we see the average return is only minus 6.56%, and the positions in profit about 44%. So we want to see that climbing up. We want to get above 50% positions in profit. But overall, it really shows you how we weight things. Stock investments are the lower risk. We weight them a lot more, put more capital behind those trades. Swing trading, I reserve about 20% of my portfolio for swing trading. In terms of altcoins, I really only reserve about 20% of my overall portfolio, maybe 25%, kind of as a fully deployed allocation, let's say. So right now, if we put 10% into the alts we put 10% into our alts, or we put 5 to 10% into these alts, and then we go down a little bit. Although we do have that minus 6% average return, these are unrealized, so we're letting these run. If we do get that alt season, or we get that continued relief rally, I expect more of these positions to flip to the green as we get into really good profits. So virtual here, we see up 74%. We're essentially now we've got stop losses above our cost basis. It's a risk-free position. We're almost at that mark. When we get to $2, I'm going to take half of this position off the table. That's essentially making it a risk-free trade. When you get nearly 100% returns in a short amount of time, it doesn't hurt to use a stop loss or take some profits. Book that kind of, get those gains off the table, and then just ride that free position, that house money position, and ride it to wherever it goes. It's risk-free. You could go up another 5, 10x, or we might go down 90%. It doesn't really matter because it's risk-free. We've already booked our profits, and we're on to the next trade. So just keeping an eye on that and just showing you the power of really splitting up your portfolio. For some people that just went really heavy into alts, they might be hurting a little bit more, getting some of these lower performances here. And then other people who might have been trading but not really taking advantage of the lows on other assets, you really just missed out on different opportunities. We essentially use our strategy. We use the same tools, the same analysis. We just adjust the time frame essentially, and we're able to take advantage of all the different opportunities in spot altcoins, in swing trades, as well as in lower risk, longer term stock investments. So we've pretty much done a really good job, nice gains across the board. And now we're looking at what is next. So we're going to jump over to our chart and get a little update on all of our assets that are currently open trades. So looking at the SPY here, continuing up on its daily uptrend, broken above that 50-day moving average, which is nice to see. So we'll take a look at our momentum indicators here, losing a little bit of momentum on the Vortex indicator, but the DMI did get that bullish cross here. RSI and MACD trending up, but kind of just around that neutral territory. So we want to see either we're going to come back. There's a couple gap fills here. So there's a gap here and there's a gap down here. We've also got our Fibonacci retracement support zone from this low to this high. So ultimately what we see, we might come back, back test this zone here, this 550, 555 kind of region. If we can bounce from here, then we do, I think, have a good chance of getting above the 200-day, and then we want to bounce, come back, retest this 200-day as support before we can continue up to this upper trend line, attack these highs. Otherwise, we could ultimately come back down to this lower gap fill down here with that Fibonacci retracement. If we come down here, we're going to need to really maintain that uptrending price action because we will lose this trend line. So just paying attention to that. But SPY right now, I don't really consider it tradable. Either we're going to wait for that clean break of the 200-day back test and then continuation to the upside, or we're kind of going to wait for the alternative. We come back down, we break below here, you know, maybe something like this where we do come back to our lower support zones here, fill that gap before then potentially trying to reverse from there. So we're not going to know until it really plays out. You know, we're riding our positions. We're up 15% on our SPY position, so not chasing at this point. Patiently waiting for our entries, for the additional opportunities. Same thing with the NASDAQ. We're also up about 15%. It's also going to look quite similar. You can see we're coming into this swing resistance here. So previously rejecting, we could look to either breakout, back test. If we can back test, get above this swing entry here, and we could get that little continuation. We're going to watch. We have a trend line forming here. So this little trend line, just waiting. We might come back, tag it down here. Let's pull our Fibonacci and see where that lines up. So we'll start with this one. We can see not quite, you know, getting that Fibonacci retracement. So we go from our low to the high until this is satisfied. So looking for that opportunity. The SPY, or excuse me, the NASDAQ is showing a little bit more relative strength here, pushing into that 200-day. So we'll continue to watch this. Look for that breakout back test, holding this as support. Taking a look at the indicators, they also are looking quite similar to the SPY. So same thing, we're just waiting, not buying into resistance, waiting for the back test and higher low support. Looking at NVIDIA here, we came down, you know, wicked all the way down here, kind of around $85. Got a nice pump up, higher low, continued higher lows, higher highs. So right now on the daily, we've got, you know, excuse me, higher low, higher low, higher high. So waiting again for that subsequent higher low. Right around here, we're above our 8-day and 21-day EMA. We're above our 50-day moving average. We are still stuck under a decent amount of resistance. So we have the 200-day. We've got this swing high here, a pivot point. We've also got this horizontal resistance through here. So same thing. I'm not chasing it here. I'm waiting. If we back test, get that higher low, you can add to your position and then have that stop loss protecting it and ultimately continuing to ride that momentum to the upside. We take a look at our momentum indicators. We see the bullish momentum on the vortex slowing down a little bit. Same thing here on the DMI. RSI and MACD look good, but I do expect, you know, there to be some sort of pullback. You know, nothing goes straight up, whether we keep running a little bit further up and then get our pullback, or if we pull back kind of in the shorter term. The important thing for NVIDIA is that these lows at 103 or 104 hold, because that is our daily uptrending price action. If we want to confirm on the weekly, we need the price action to continue on the daily. So NVIDIA is looking good for now. CoreWeave, one that I talked about, sub $40. Look at that. We came here, we broke out of this channel, came in, put in this low here, put in the higher low, and we're off to the races. Now we're above this swing resistance, so really good sign there. Looking for a potential back test of this support zone and then holding these lows. Same thing we want to see, that continued higher high, higher low structure. It is a new asset, so the lower or the higher time frame is really not going to show a lot right now, but we can kind of see what we have here coming down this downtrending channel, breaking out. We put in our low, put in our higher low, kept the lows here, and then we've broken out. So if we can continue to hold here, we're looking good. Nice continuation, holding well, $50. So a nice return there on CoreWeave, as we see, almost 30%. Really good one there. So watching for that back test for a potential opportunity to add. Palantir, another one, came down. You know, look at this. We saw this breakout, came down. It did kind of start pumping. We missed the initial entry. We started kind of taking that trade and then saw it break down, cut out of that position. Ultimately, it broke down a little bit more, so we had to wait for the confirmation. So we've got the higher low, higher high, subsequent higher low, another higher high, and the confirmed daily uptrend higher low from about $90. So between $90 and $95 $1.95, I was DCAing there. You can also see the bullish momentum building here on the Vortex and the DMI, as well as coming from that oversold territory. So that's what we want to see. Uptrending price action coming from very oversold with bullish momentum building. And then we saw some pretty solid partnerships and deals announced with Palantir, really sending them up. It's been one of the top performers, so I'm pretty happy with that position we got there. Looking at BABA performing very well today. Another one, we talked about this. We've successfully traded this twice. You know, we got into this move, we took our profits, we exited on the breakdown, avoided this downwards price action, bought back in down here between 100 and 105, and look at that, we're now uptrending again. So we're right into that 50-day. Nice returns there on BABA. Same thing, we're not chasing these guys, we're just watching these. We're continuing to move our stop losses up. So if you're in these positions, you know, we've been in since 105. You could have your stop loss up here around 115, protecting those returns. And then if we do break down and we go into that downtrending price action, you've protected those gains to the upside and you're able to redeploy it when it makes more technical sense. So it's really up to you. At least using stop losses to protect the positions is what I'm doing currently. So BABA, another nice performer here. Just really showing strength, continuing that uptrending price action here on the lower time frame. We look at the weekly and try to see what's going on. So same thing, looks pretty strong. It's a similar pattern to what we saw here breaking down. That's why we avoided it, but we're holding higher lows. So again, look for the higher low entry. Let's pull our Fibonacci. If we are to kind of break down a little bit, we need this area to hold 103 up to 107. Worst case, you know, $96, but we don't want to come back down and put in a lower low because that's that signal of continuation to the downside. MP metals here, we're just grinding along this trend line. We flipped this previous resistance zone into support. We're holding this and we're just stuck under this 200-week moving average just above the 50-day and supported by the 200-day as well. So MP looks fine for now. They're the only operating rare earths metals mine in the US currently. So I feel fine with this position. I'm not worried about it, especially as they continue ramping up domestic production of semiconductors, you know, chips, everything, all these companies moving some of their manufacturing elsewhere. We're going to see companies like MP Metals kind of hopefully catch a bit of a bid. That's what we saw here, but we waited for that back test, you know, coming here before entering that position. So MP Metals, although about break even, you know, I'm comfortable. We're looking at it from a historical standpoint. It's still pretty low. Looking over here at MSTY. So this is that yield farming strategy. What we saw, we're coming into this resistance zone. We need to break above it. So potential, you know, if you are in this position, you could take some profits as we come into here, but I'm waiting for my dividend payout. So that's not going to come for probably a week. You know, I'd rather just hold this. I think we hold support. If we can catch this move or a similar move to this, even just to this trend line, it's going to look really good here. So MSTY, we're holding this. Same thing. We're not chasing. We're just waiting. If we do get that entry back towards $21, sub 21, that could be an opportunity to add to MSTY. That would be the back test of this downtrend breakout, as well as this Fibonacci support zone and this horizontal support zone right here. So paying attention to that. MicroStrategy, really strong performer lately. So they just had earnings yesterday and they're up again today about 5%. Beautiful downtrend breakout, breaking above both these two trend lines. They're a little bit more visible on the daily here. So we see this one from the high, and then we see this one from these highs, breaking out. Beautiful move up right into that swing high area. So we got to see either we're going to come back. If we do come back here to this, if we get to 310 or lower, look for that swing trade opportunity with the stop loss below support, because that is a lot of confluence of support in through here. We've got our 50-day moving average, we've got our 618 to 786 Fibonacci, we've got two down sloping trend lines right here, and we've got a prior swing high resistance breakout point with the VRVP point of control. So again, I don't think things go straight up and down. Whether we break out a little bit more and then retest those higher lows, look to enter on the higher lows if the indicators look good across multiple time frames. So that's MicroStrategy looking really good. Bitcoin, we're up here. We've got a position from 86,500, currently up 12.5%. So same thing, looking for a couple opportunities for Bitcoin here. We want to see for continuation these lows hold, so we need to see these lows in through here, and that would be coinciding with this 618 Fibonacci. It would also retest this prior resistance swing high breakout zone, so also this prior support zone previously acting as support for this entire price action through here, and then resistance through here. So ideally for continuation, something like this, come back, retest the higher support zone, continue from there, taking out these highs. Otherwise, if price comes back and breaks below, it's going to need to do more work, so we might be looking at a lower target here, somewhere down in this Fibonacci support zone here. So watching for that potential for Bitcoin to add down there, as long as we're holding these lows, you can see. And then when we flip to the weekly, it kind of gets rid of a lot of noise. You start to really understand, okay, this has just been one move. Nothing is straight up or down, so I'll show you kind of, you know, all the time. Look at this. We think, you know, we're never going to get our entry. We've completely missed it. And then price goes down 50%. And this is the entry that you want to take, or over here when we have that confirmation of trend change. So just flipping to the weekly, often it will retest it. You just have to be patient. If we're constantly watching the 4-hour chart, it's going to feel like it's taking forever. But that's why we pay attention to the 4-hour, the daily, the weekly. We want to see those signs of early movers on the lower time frame. We want to position ourselves strategically, and then we want to add to those positions when we get confirmation on the higher time frames to really build those positions and ride them to the upside with trailing stop losses. SUI, another one. So I did kind of have a big write up here on SUI. I'll kind of flip, I'll get back to that after. We see here Tau. Tau did break out, same thing, big downtrend breakout. We're stuck under this swing resistance, so we're going to flip to the daily, see what it looks like, and then take a look at our indicators as well. So we see here on the daily chart, holding between these two zones. If we do experience a larger Fibonacci retracement, look to add or take that position for Tau around $250 down to about $215. That would also be a retest of this support zone, so potentially looking for an entry there. But you know my thoughts, we're not chasing up here. Wait for that confirmation on the high time frame. Caspa is another one doing quite well, has broken out, gotten above this support zone, and look at that, we've got a higher low, higher high, subsequent higher low. So what I need to see now, we want CAS to take out this high here, come back, hold this higher low, and we could potentially look to add to our position on the subsequent higher low and capitalize on that further upside. Fetch AI, same thing, another one I'm really interested in. You know, AI coins showing a lot of relative strength right now in terms, in comparison to Bitcoin. They're kind of being some of the first movers, the biggest movers. So we see this trend line here. We've also got a lot of support down in here. So look for that back test. You know, you might be looking at about 58 cents down to about 46 cents for that entry into Fetch on a spot accumulation. We could look for a swing trade opportunity if we come back, retest some of these levels down here around this upsloping trend line. In terms of AIOZ, this is one we also have a current swing trade open on. So holding above key levels of support and resistance. We see we are getting rejected a little bit right here. So we'll take a look on the low time frame, see what we're dealing with. We're just stuck in this pivot high resistance and stuck between support. So look to see, you know, we want these lows to hold again. It's important that the higher high, higher low structure holds. So we need AIOZ ideally, you know, if we break out, back test, and then look to enter on that back test confirmation to the upside, adding to our position. So that's why I'm not afraid to add when price is a little bit higher if I have technical confirmation. So right now, this is pretty undecisive price action. If we were to break out, break these highs, come back, we retest this, and then on the low time frame our indicators are looking really good, then you could look to add to that AIOZ swing position, build it a lot more, and then it raises your cost basis up a little bit. But because we've been in since lower prices, you know, your cost basis still ends up where you can have a nice stop loss below support, and that position is protected, and now you have more capital in, and you're able to better kind of experience the upside if it plays out the way we think. And Render here, this is another one. I don't know if Render, don't currently have a position, but we do like it. It is an AI play where, you know, nice price action. We've broken out, we're holding higher lows. Look for the higher low structure to maintain itself and potentially get in on that opportunity. That's pretty much it. So a lot of charts, you know, kind of rapid fire, not a lot of actionable charts right now at this moment. So what I always say, we want to be ready, we want to be prepared. When these entries come to where we want, then we need to not be scrambling to figure out what we're doing. Make a plan ahead of time based on the technicals. Focus on strong fundamental assets showing really good relative strength to other markets, and then when your entries come, you know, we're there, we're ready, we just execute them. We're not scrambling, we're not trying to figure out what's next, what do we do. You know, we're always thinking 10 steps ahead of the market, but ultimately we have to wait for what the charts tell us, wait for that confirmation before we're actually executing our strategy. So thank you so much for watching, guys, and I'll see you in the next one.